Hey everybody, welcome to Mortgage Today for Wednesday, February 28th, 2024, and oh, what a day it was. UMBS were up 2 basis points on the open. Bright and early today, we got the Q4 GDP revision, which came in at 3.2 versus a 3.3 forecast. GDP PCE price index is 2.1 on a 2.0 forecast. Wholesale inventories came in down 9.1 versus a 0.1 forecast. It was 0.4 previously. None of this morning's data really matters. It might matter more if it were the initial GDP release for the quarter. But even then, we'd be looking back 3 to 5 months in the past at a time when the latest economic developments are of the utmost importance. The trading response confirms the lack of interest in the data. S&P 500 contracts dropped 0.3%. Treasury 2-year yields, which are more sensitive to imminent policy moves, slipped 2 basis points to 4.67%. The dollar advanced, and cryptocurrency-linked stocks jumped after Bitcoin breached 60,000. Also got a great quote here or a great passage from Bloomberg, but it sums things up perfectly. Bond traders no longer predict the Federal Reserve will cut interest rates by more than 3/4 of a point this year, with the view now finally in line with what the central bank itself has indicated for the likeliest outcome. That closes a gap that has been narrowing since the start of the year between what traders forecast for rate cuts this year and the pushback against those bets by central bankers. That's unraveling what was supposed to be a big bond trade of 2024. The yield curve is returning to a traditional upward slope. More problems for real estate agents. A lawsuit filed in California targets buyer agent commissions, arguing that they should be zero. For years, buyer-broker commission rates have remained stable despite A, an increase in home values, making those commissions much more valuable, B, a diminishment to near nothing of what buyer-brokers actually do to earn commission, and a truly competitive rate for buyers agents would in fact be 0% or $0, as a vast majority of cases, buyers agents do minimal, if any, work to secure a sale. Oof, damning indictment there. That seems like let's be generous and say a spurious argument. There were a few instances of volatility in the bond market today, with several of the larger moves lining up with larger doses of volume. In a data-dependent world, it's odd to consider that none of the notable moves had anything to do with economic data. Instead, it was a surge in corporate bond issuance around 9 a.m. causing some selling, and the 3 p.m. close causing some buying. And even then, those events added up to a pittance of activity and drama. Bonds managed to clock modest gains, but that only served to solidify the sideways trend that has been in place since the February 13th CPI data. UMBS ended the day up 19 basis points. We'll take it any way we can get it at 100.39. So at 100.39, we are above that 200-day moving average, but we're still got that tight lid at that Fibonacci line at 100.428. We're getting more data on lenders in the market. Loan Depot is singing the cyber blues, expecting a $12 to $17 million hit from the cybersecurity incident affecting 16.9 million individuals. Lawsuits, regrets, and ransomware woes follow. United Wholesale Mortgage's financial woes are on par with the rest of the industry. The company suffered a $461 million fourth quarter loss, blaming it on mortgage services rights. The full year of losses was smaller at $69.8 million. CEO Matt Ishbia remains optimistic, touting operational profitability and a focus on investment despite a decrease in loan volume and gain on sales. With $2.2 billion in liquidity, including substantial cash reserves and borrowing capacity, the company aims to weather the storm, although I'm sure their shareholders aren't particularly thrilled by it. We also got a post from our sponsor at wellthatmakesense.com. This is from our Yeah But series, where we discuss the pros and the cons, the fors and against student loan forgiveness. There's good reasons to do it. There's bad reasons to do it. There's good reasons for it. There's bad reasons against it. Let's look at all of them at wellthatmakesense.com.